Good evening, everyone. Time for another silver update. This is an overlay of silver and the Dow 30 provided by netdania.com. You can click on the link below. I'm going to jump over to a story and read that real quick and then come back to this chart and talk about it. As you know, on Thursday, the Federal Reserve released some minutes. So I'm going to read a little bit of this story and then get back to the chart. A two-day rally in the stock market came to an end Thursday afternoon when an account of the Federal Reserve's last meeting revealed a split between bank officials over how long the Fed should keep buying bonds to support the economy. The Dow Jones Industrial Average and the Standard & Poor's 500 Index treaded water for much of the day and then slid into the red around 2 p.m. Eastern after the Fed released the minutes from its December meeting. At last month's meeting of the Federal Reserve Policymaking Committee, the central bank pledged to buy $85 billion worth of treasuries and mortgage-backed bonds and also keep a benchmark interest rate near zero until the unemployment rate drops below 6.5%. On Thursday, the minutes from that meeting showed Fed officials were divided over the bond purchases. Some of its 12 voting members thought they should continue through this year, while another group thought they should be slowed or stopped much earlier. Just a few members saw no need for a time frame, according to the minutes. It's pretty surprising, said Thomas Simons, market economist at the investment bank Jefferies. Quote, I think everybody thought there was broad agreement on policy, but now it seems like a few of them really wanted to vote for it. The stock market opened on a weak note, etc., etc. So let's get back to the chart here, because this was after having the fiscal cliff bill pass, which is just an absolute joke. It amounted to a 2% across the board increase in the payroll tax. So they raised taxes on everyone who works. And now the CBO is estimating that it's going to balloon the deficit by $5 trillion. So you know it's going to be anywhere from 2 to 5 times that size, because those estimates are always low. So basically they kicked the can down the road, but also made things worse. They raised taxes and they're going to increase the deficit. Again, no hint at cutting spending. This is what I've said all along. They have no intention whatsoever of reducing the size of government. They're going to grow government until it completely bankrupts the entire country and destroys the economy. That's what they intend to do. But if we look at the chart here, we can see the machinations of the Fed. Now, if you remember from that story, they were saying that the rally was stopped. Well, here's the trend line of the stock market rally. You can see that stocks opened Friday after that news. The news came right here, and you can see the massive smackdown in silver that happened that coincided with that. Here's the minor takedown in stocks, and of course a recovery the next day into new highs. Silver, on the other hand, barely made it back to halfway of where that was. So fairly obvious in my mind what this was all about. After having the tremendously irresponsible Congress, which is just, those guys are pathetic, is the only way they can be described. After having their tremendously irresponsible vote on the latest bill, which just blows out the budget, blows out the deficit, and then to have the Fed come out and make this statement. Obviously, the Fed was trying to do some form of damage control by the tremendous damage that the Congress had already done. Now, of course, the idea that the Fed is going to stop buying the bonds is absolutely ridiculous and absurd. Yes, they could do that, but if they did that, there would be a collapse, and we'd go into a depression, and then they would be held responsible for that. So it's highly unlikely that they're going to do that. I think that this was just a typical deflation scare that gave them an excuse to come in. And I also think that this is very clear when we look at the action that occurred, that it is clear that the actor behind the suppression of the precious metals, gold and specifically silver, clearly is the Federal Reserve. The Federal Reserve is the group that is most responsible and is the one behind the banks who are shorting the precious metals, attempting to suppress the price of the precious metals, because rally in the precious metals, which is real money, gives a lie to the fake money that the Federal Reserve prints. So a very desperate move, in my opinion, and I don't think when we look at the Treasury bond and the financing in a little bit, we'll see that there's no way that this can play out. It's just a deflation scare. But let's get over some questions. First question is from Denarius. Big government silver. And he says, hey, BJF's been a fan for some time, just now posting. My question pertains to the bullion bars rounds. I'm wondering a bit about the history of how these rounds, eagles, maples, Krugerrands, pandas, came to be minted by the world's large governments. My personal opinion is that prices of bullion are suppressed for the sole purpose of perpetuating the current system as it was built. If the powers that be want badly to suppress the prices of the only real lifeboat out of the system they've created to entrap us all, why on earth are they openly minting the very thing that can lead to the downfall of the system they've created? After much research, this is a stone left unturned for me to understand. Thanks in advance for your time and insight. Well, I'd have to say that my number one suspicion as to why they have done that. Now, it's different in the different countries. Of course, the Krugerrand has been around for a very long time. The Silver Eagle didn't come into existence until around 1986. I believe Ron Paul was behind that legislation. And I don't know how long the Canadian Maple Leaf has been around, or the Perth Mint products. But my guess is that probably the reason why they do that is to maintain some form of control and to be involved in the system. If you think about the laws that regulate IRAs, for example, the approved products in IRAs, Silver Eagles, of course, I believe the Maple Leafs and other Perth products are permissible in IRAs, the Philharmonics as well. So if people put physical silver in their IRAs, those have to be held by a custodian, and the government has that information. So if they didn't do that, let's say that all of the silver and gold was minted by private mints, and then all the investors who bought that, they would be buying that most likely with money that's outside of the system. In other words, not a part of any retirement system, and the government would not have very good numbers at all on that. So that's my best guess. I think that they know it's going to happen, so they would like to be involved in it rather than be on the outside of it. Next question, $1 trillion coin. Now, I've been reading about this. I haven't read the facts on it. Nathan Sensation 5 says, I want to get your thoughts on the $1 trillion coin idea that keeps returning and plaguing the intellectual few that understand it's not even viable. How could anyone actually believe that the Treasury could just make a coin with no underlying value and then pay the bills with dollars that aren't even the same as normal dollars? How can a non-elected secretary constitutionally manage and spend money that does not come from the Fed, since the Fed unfortunately owns the right to issue our money for the last 100 years? Would we accept payments from something that has no value? Your thoughts? Well, the Fed is not constitutionally empowered. The Fed is empowered by the Congress, which passed the Federal Reserve Act, and the Congress could very easily repeal the Federal Reserve Act or amend the Federal Reserve Act. And we're on the 100th anniversary of that. So that very well could be the case, that the legislation creating the Federal Reserve and the system of borrowing dollars into existence could be changed. Many have talked over the last century about the idea of having the Treasury issue the money directly, not borrow it into existence. So those ideas have been around for some time. Are they going to do away with the Federal Reserve? I think probably they will do away with the Federal Reserve when the system completely fails. And that may be as soon as this year. Next question, recommended reading. Hi, Brother John. I've been following your blog and the forum for a short while now. Consider myself to become awakened, if you will, to the relevance, consequence of monetary policy and central banking in the past. I never thought much about inflation, interest rates, currency, and money, but I'm now much more concerned about it given that my wealth and my kids' wealth is being expropriated by the current day powers that be. What I find myself confused about is some concepts and notions that are often referred to anecdotally, but not necessarily concisely. Do you have any recommended books that touch on these? I prefer hard copy rather than sorting through dozens of wiki pages looking for something that would explain the technicalities of it all. Well, that's a difficult one. There really isn't anything that covers everything. There's a lot of books that people love, Creature from Jekyll Island, and I personally like the Market Wizards books. I've got them on my Amazon store. Of course, a classic is Jesse Livermore's Reminiscences of a Stock Operator. That's about the stock market. But there really isn't any book that I could recommend that explains it all. Probably, I know you say you don't really want to look through wiki pages. I would say Zero Hedge, the website zerohedge.com, and all of the commentators on there, and as well as the comments. Those are people who are very highly educated, and there's a lot of information there about the markets and how they work. So unfortunately, no easy answer. Just keep studying. And the last one is from Epiphany, Silver Supply Increasing. I'm not going to go to this YouTube, but we'll read the question. Hello and thanks for all you do. The website I'm posting a link to shows charts and statements that indicate the silver supply is increasing. I notice it stops at 2011. Would be interested in your take on this information. Personally, I'm not sure what to make of it. Well, there's charts I've shown in the past on silver supply increasing. It actually shows the supply going near zero and then all of a sudden turning around and doing a U-turn and rallying, going nearly straight up. In 2006, that's when the silver ETF SLV came on board. I have done episodes in the past trying to account for where all the silver came from that's supposedly in the SLV. Now it's about $9 or $10 billion worth of silver just sitting there in the SLV. That's one of the things they're referring to. And but I think that this silver supply that they talk about is really just rehypothecated and is mostly paper silver. Probably 95% of the supply that they're talking about, in my estimation, is probably paper silver and isn't real silver. We're only going to find that out, as Warren Buffett is so famous to have quipped, that we only find out who's swimming naked when the tide goes out. So we're going to have to wait for the tide to go out to find out who really has the silver and who doesn't. But I suspect that the silver supply is much, much lower than what people think it is based on those charts and figures. So let's get over to a deeper analysis of this Federal Reserve latest deflation scare with their threat to stop buying the bonds, basically. And I brought up a chart here from More Research, their free charts, and this is a chart of the 30-year bond. Now, you can see that this is the biggest bubble in the history of the world, probably. You can see this bull market has run for more than 30 years now, running straight up, and you can see it seems to be in kind of a parabolic blow off top. We had a spike in 2008 with the financial crisis, and it came back down, and then it's rallying again. I think probably from about this point in time, right here, 2009. This has been the Fed buying this the long-term bond. Now, if the Fed stops buying it, what are the consequences going to be? Well, let's just take the baseline here. This is par 100 in the 30-year bond, and I believe I read that when the 30-year bond is trading at par, the interest rate on it is 5.5%. So let's just assume that it gets back to this. You can see that this is kind of based on a swing rule. This is very close to the normal price. You can see when interest rates were near 20% back in the early 80s, and now interest rates are near zero. So 5.5, we'll say 6%. If we do the math and we'll say 6%, and I'm going to assume a $17 trillion deficit, then with a $17 trillion deficit at 6% interest rates, you're talking $1 trillion a year in interest alone. That's what we would be paying out of our tax revenues, is $1 trillion a year interest on that national debt. Now, as we know, the tax revenues are roughly $2.2 to $2.3 trillion a year. I think the Obama administration and the Congress think they're going to get more money, but you have to remember that raising taxes does not necessarily raise revenues. There is the Laffer curve, and that is a very real phenomenon. You can only raise tax rates so high before people start to flee with their money. They begin to change their behaviors. Of course, that's the way markets work. There's always an unforeseen circumstance. So it's quite possible that tax revenues have flatlined around $2.3 trillion and aren't going to go much higher than that no matter what they do. If that's the case, I believe I read today that now welfare, and I think that's all of the welfare put together, food stamps and everything else, is about $1 trillion. So if the Fed allows interest rates to go back to that 6% normal interest rate, then we'll be paying $1 trillion in interest. We'll be paying $1 trillion in welfare, which I don't see that going down. And that doesn't include Social Security, the Defense Department, or any of the other non-discretionary or discretionary spending. So you can see that there is no way that the Federal Reserve can make good on that threat. That's just simply a deflation threat, and we can see from the chart what was behind that threat. Silver was beginning to do what I had predicted. It was going to do a snapback rally. I was predicting a snapback in January. It actually did snap back all the way up to $31.50, and it was getting ready to rally again following the stock market up until the Federal Reserve came out and pulled that little stunt. I think it's going to be very short-lived. I think we will have a snapback rally, and it will continue. And the next target to get through is going to be that high that we put in, and that's right about 31.50. So that's the price we'll be watching, and we'll talk to you next time.